settle and maybe take a trade after this is this pullback here. Right. This pullback to VWAP where we've gotten a confirmation now that volume has left the range, price has left the range, and we got a pullback to retest that volume and it held. Right. And this you have to be patient for. You're waiting 18 minutes to trade on a market that, just moved up 150 points, and you might feel like you're late to the move. But that's when I think it's important to have, potential areas for where you think the market can trade. But this pullback here and hold of a VWAP, to me, that's a beautiful trade if you miss this initial one.
And
Go ahead.
Can you get 40 points out of that, Coach?
Oh, absolutely.
And there it is.
You can go 40 points before you even make the daily high again, right? Like, if I took this trade here, and I'm just thinking about the way I would think, because yes, we can see the market went up another, 200 points. If I took this trade here, my conservative price target would be not even at these highs. I think, like you said, Coach, 40 points, conservative. If it gives me more, it gives me more. But the market showed me up here that it rejected at these prices. So if I'm buying what is now the lows of this move, I can't have a price target much higher than this if the market showed me a rejection. Conservatively, the extreme price target can be higher, but I still need to watch the market reaction here. And like you're saying, before we even get there, that's 40 points. That could be your whole day.
Yeah. It's just, and that's something I personally, and for a lot of, I need to adjust to on day trading.
Mm-hmm.
Especially when if I look at 4 different markets, I see that kind of setup. It's a higher percentage. I have to accept that singles and doubles win the game.
Yeah.
Right?
Absolutely.
If you're always swinging for home runs, it feels great. Oh, you can hit a home run with no one on base. It's 1 run.
That's a great point.
Right?
It's a great point.
The more I traded, I got away from it because I'm a basketball coach, but I love, if there's any sport that really resembles trading, it's baseball.
For sure.
I mean, so why I get back to that is, 40, 60 points in the NASDAQ is good money.
Everything else is bonus money.
We talk about this, respecting the money.
Mm-hmm.
Sometimes we don't respect that money.
Right.
And especially in day trading, it'll catch up to us.
Coach, what I really love about what you're saying, and again, this is kind of just, we kind of started this segment about how I learned how to trade a little bit, but, he would say exactly that, right? If you could figure out how to make, and we were trading stocks at the time, and we'll use your same example. He said, if you could figure out how to make 50 cents out of a stock, you can make a ton of money because all you have to do is identify that 50-cent setup and add size to it when you're ready. If you can identify a 40-point trade in the NASDAQ, and do it consistently where you say, hey, to a high probability, this setup has shown me that it presents 40 points to me. I don't care about the other 300 points that the market trades. And I don't have to measure that, right? I could measure, hey, this is it. This is one of those setups that presents 40 points. If and when I'm ready to scale up and make more money, all I do is add another contract once I can accept that risk. And the setup never changes. I feel like a lot of time we try to figure out market direction and where exactly it's going. And I think it's important to have that context. But like you said, we're day traders. trading. Identify a setup that presents high yield to you and take it when it presents itself.
Yeah.
Order filled.
And it
Order
presented on
filled.
both sides of the market.
Oh yeah, it was all over the place.
And that's, I mean, exhausted, got back under VWAP, went back to the other side, bounced. And like we said, it ended up being a violently unchanged day.
Yep. Yeah.
So
Going
discipline.
into tomorrow, I expect this range until NFP. NFP is going to tell the story. I don't even want to try to predict what's going to happen because that news is going to dictate the rest of the day. So I'm going to do the same thing, frame out that candle, see the highs and the lows of it, maybe attach a VWAP to it and see how the market reacts to it. If we, again, zoom back out to what we had, the last NFP, we anchored a VWAP there, and for a month, the market went straight up. So it is going to be an important number for sure.
That number is going to we're still above it.
Yep.
And if we see a spike down and a recovery, that could be an opportunity. Things. So, bottom line, especially for equities, and by the way, NFP will affect everything.
Everything
except for grains, hogs. That doesn't care about it. Cattle.
Right.
But anything financial attached to it is going to be affected. It's become the number. And don't trade in front of it.
Yeah. We got a question from Slip Kid before we move on. And Coach, I want to go to, would you rather crude or gold? I know you traded both.
Crude next.
Crude next. All right, cool. We got a question from Slip Kid. Do you distinguish between big volume for price movement versus big exhaustion volume, which might signal the end of a move? Absolutely. I told you guys I use delta indicators, and I'm waiting for the delta indicators to be part of Top Step X, and they are on the roadmap. But where the volume comes in relation to the move is important, right? Especially for these volume candles. I'm going to take all the drawings off for now, but especially for these volume candles where we're not getting the kind of inner workings, if you will, of that. If I see heavy buying volume at the high of what looks like a trend up, right? And I'm just calling this buying volume because the candle closed higher than it opened. That is a signal to maybe potential exhaustion, because some of that volume could be sell side, right? So what I want to watch in this case is the candles that come after it, right? And we talked about this yesterday, the sustainability of this volume. This candle right here at 10 a.m. Eastern Time, 9 Central, was higher volume than the open. If I just look at volume patterns, how sustainable is it to have consecutive volume candles that high, right? And when I say consecutive, sustainable, 3, 4, 5 candles of similar volume, right? We can see it. We made this high on high volume. Volume is immediately decreasing after that, right? So there's no initial immediate follow through. Does that mean the move is over? It doesn't, but that means there's potential because this volume looks like it's starting to get rejected, and we can see it. And we made that second high. Again, volume is increasing. nowhere near as much as we saw in this huge candle here. And again, this is kind of just how the NASDAQ works. It gave a second attempt at it. But again, on this push up, we're not seeing that volume increase, right? As price is increasing, volume should be sustainably increasing, and it wasn't. A little different here, where, and again, this is high volume at the low of this move. We want to watch for potential follow through. This one happened at 10 a.m. Central Time, where we know we might be moving into that lunch, kind of London close. And it's not just a one size fits all, though. I think the most important thing I'm going to do, and Coach, we've talked about this a ton of times. You got the volume, frame it out first. If this looks like exhaustion to you, and let's say you wanted to take a long, right? Because we've seen this a lot, right? Where we get the candle that looks like exhaustion, and then you want to fade that move, right? Because a lot of times, if it really does set the low for the day, that's your best trade location. Let's say that was the case, and we see the market this way. We see heavy volume coming down to, where we opened the markets, and I wanted to take a long initially. Decent idea so far, right? Coach, there's your 40-point trade right there.
There. There's a lot of 40-point trades, and I've been noticing that. And just because, like I said, I'm more comfortable on a swing trade, but I think if you get good at day trading, why not do both?
Yeah.
It's a different mindset, but 40 points is okay. That's $800 on a mini. That's $400. On a micro.
The 5 micros, right?
Excuse me, 5 micros.
That's a great day.
Someone offer you a job to pay you $400 a day. That's $2,000. That's $100,000.
Yep.
A year.
It's a great salary.
Now, and not only that, you can, and this is not and this is without the losing days.
Right. Right.
But if you can average 400, 300, and build the account where, okay, I've doubled the size of my account, I can make that a mini.
Yep. Yep. Compounding.
That is compounding. Which is Warren Buffett says the greatest thing that was ever
the greatest
invented.
world wonder, right?
Yeah, the greatest world wonder. It's about, and when we talked, it's about respecting the opportunity and respecting the money.
Yeah.
I'm guilty of it when I day trade. Like, oh man, this is the one I could.
Oh yeah.
And when that happens 20% of the time, but that other 80% of the time is heartache.
Mm-hmm.
So understanding the time frame you're trading in, what the opportunity is, helps you have a mindset that is disciplined and not greedy. I think a lot of there's fear and greed.
Yep.
Which one is it? The one you have to
It's one of them.
conquer.
Yeah,
It's one of them, right?
it is definitely one
To
of them.
me, right now, it's greed in the day time frame. So, yeah, 40 points. Not
Yep.
bad.
40 points in 6 minutes, $400 in 6 minutes is not a lot of jobs in the world that's going to pay you that kind of rate. And again, like Coach said, there is the potential to lose as well. And then just to finish off that volume question, right, where that might look like exhaustion, and you get 2 candles in the opposite direction, maybe you want to take this as a long. What's really important here is to assess the volume that's coming in after this rejection, right? I'm saying that this may be a potential long. There's other short time frame traders that are going to think the same thing and jump in on this trade. When the market starts to get back up to where that selling came in, if that buying stops, guess what? The move might be over. One of the trades we really love looking at, Coach, is a candle close outside of here, which then means that these sellers would be trapped. And now we're looking for a long because we got the confirmation that the market's done trading these prices. We didn't get that here. We got a rejection. So this here is a beautiful short entry where I can limit my risk right above where that volume came in, right? Because I know the sellers created this. If we trade back up to their prices, the way I look at this is there are some sellers down here as well at 18,950. If I'm selling up here, I get a better short than the traders that got in down here. Now, worst case scenario, maybe we trade back down to their prices and I made 40 points, but they initiated this volume. So if they're ready to make money on that position, then we get something like this. And now I'm making money with them instead of to their position. And there you go for a 100-point trade. So I think that I personally think there's a lot of reads to be made from volume, and I'll keep trying to share them. But really good question on that exhaustion, because it's important to try to identify. Delta makes it 1,000 times easier. I'll say that straight up, and it is on the roadmap, where you almost don't even have to guess about what's happening. It's just showing you.
Right.
You said crude,
We
Coach?
should move on to crude. Yeah.
Yeah, we got 15 minutes left.
Oh, this goes fast.
It goes by.
Fun. I hope you're having fun. Keep giving us your questions.
And if you're having fun, hit that thumbs up button. Coach.
Oh, yes. Smash it, please.
Crude oil. I'll let you take this one. I know you were looking at this today.
Can you bring up the half-hour chart?
Mhm.
All right. And then we have, okay, so first thing I'm looking for is we're under the 200 bar moving average. All right. I want to take sells.
Yep.
So in this case, we had this rally. All right. And how did you get that range? It was from another day. Keep it up there, because
Yeah.
I'm going to give you a level. Is
Okay.
the pivot. The pivot, excuse me, my first resistance I had on my daily levels.
Mhm.
First resistance was 70.83.
So, wow. Shameless plug for those Top Step daily levels. Myself, Coach Paul, Coach Ray, Coach Vince, Coach Jack, and of course our senior performance coach Hogue, every day putting levels up on the Top Step daily levels site. I'm going to copy and paste give me 1 second. Paste the link for that. Put that in there 3 times. These are not suggestions to take trades, but just areas of interest that we think the market can potentially trade to. And Coach Paul said 70.83 and the high of the day in crude. Coach, I mean, you're good, but you're not that good. The high was 70.82.
So, and by the way, I didn't sell it. Here's another thing is, we're talking about day trading. I wouldn't have got filled, would I? If I had an 82 offer, I would not have gotten filled.
Correct.
That's the hardest one.
Yep.
I like market if touched, but I don't want to go into that discussion right now. But I will show you this. I will say this.
Yeah.
We reached that, and it looked like it was going to go gangbusters. There was talk about production,
Yeah,
cutting off production. It was off there, and longs were in control.
for
Now,
sure.
I wasn't looking to sell it. I would say a failure of that level. One of the first, and in this time frame, if it breaks the low of the candle that made that high, I consider that a failure. And
Gotcha.
I saw that a little late, but then we got below the 20 bar moving average, and by the way, and look what happened.
Yep.
First of all, all those buyers, they were, and it happened quickly, they were all underwater.
Yep.
And then we had a collapse down through the pivot of 69.83.
Nice.
And here's another thing: in crude, that was worth 50 points, $500.
Taking your piece of the middle, piece of the pie.
Get your, I will go with this. Well, like I said, I worked with Peter Stottlemyre, and my son mentored with him in high school, and then
Okay.
he had to do his quarterly report on his mentorship. So Pete made him go to the trading floor and ask 25 traders, and some pretty big traders, and ask them why buy low, sell high doesn't work.
Wow.
It was brutal. Some of the reactions that we get were as you imagine. And why I say that here, buy low. Okay, I could have tried to sell the high, would have missed it. But
Yeah.
I think, especially in day trading, where do they fail? Especially under the 200 bar moving average.
Yeah.
So it reached that, and then it failed. I like when it fails, when it breaks. I'd love for you to do a volume analysis at that point with a 3-minute. I have a feeling there was a large volume bar that got violated.
Let's
That's my
see.
guess.
So, and we had D saying that she shorted it as well, on the push up here, and then the failed upside auction back into the initial balance. Again, initial balance, first hour of trade. But yeah, so there's this candle here, right, which is high volume. This is right at 9 Central. That one was kind of late, but again, it doesn't matter, because if we're looking for what the setup says, we don't have to catch the highs and the lows, right? Highs and lows aren't meant for us. They're meant for market makers. We don't get to choose highs and lows when they happen. Even if you waited, coach. So if you want to say, I'm going to take a trade when the high volume candle fails, you missed out on almost $1 move. But after that, the candle that closes outside of that, yes, there was a little bit of a drawdown, and depending on how tight you keep your stops, it's less than 20 ticks. After that, there is another 80 tick trade, 80 tick move available for you. If you can take 50% of that, it's $400 based on a repeated setup that we've seen, right? Volume failed. Yes, you missed the high, but the high wasn't meant for you. Find where a repeatable setup is for you. And, there are some higher as well. Like you said, you could take the candle that made the high and failed. There wasn't a ton of volume there, but once this one comes in and we see it pick up, maybe that's your opportunity.
Yeah. It's like, some of the things is to see where the buyers or the sellers fail.
Yeah.
And take advantage of it with a measured risk. And that's what that means. Buy low, sell high doesn't work. And that's what that's meant to show. Our job, by the way, like I said, you can't sell, like the coach just said, it's selling the high. You're not going to get filled. If you had this magic formula,
right,
and you said, I'm going to sell the high, well, they're not letting you in. And if you want to do it for size, it's not even going to get there, right?
That's such a great point. Right? We all do the trader math, the measurement. Oh, if I just sold 50 contracts right at that high, I would have made $200,000. It's like, except for if this was a real market, you're not even getting 50 filled. You might get 2.
Right. So what is, and part of this is a learning process, and maybe it's designed to help you get a mindset.
Yep.
If you get frustrated, and by the way, this isn't foolproof,
No, not at all.
but it's a mindset of, oh, this is a good place that I can take good risk.
Hmm.
I like those, especially day trading, where it's failure, because
Yeah.
the market, and we talk about return
Order
to the
filled.
mean. One of the best ways to return to the mean is see where it fails on the front, on the edges,
Yep.
right?
Yeah.
Instead of predicting it, is let them. you know,
Yeah.
you're not the foot soldier.